Let's focus on Senco now. For quarter one, their revenue growth was in line, while the gross margins also expanded. The management says that the reduction in customs duty will impact their margins for the next 2 to 3 quarters. To understand more about that, we have Mr. Suvankar Sen, the MD and CEO of Senco Gold Diamonds, who joins in. Hi, Suvankar. Good morning and congratulations on a good show. Well, the stock is glittering. It's seen a big up move in the last few months. So shareholders will be happy, but they'll want to know more about it. So let's focus first on the reduction in duty. What is the extent of the impact on margins we could see in the coming quarters? And also in the near term, there'll be a bit of a hit because of inventory loss. Could you quantify that? We had spoken to Titan and they as well had spoken about this. So for your company, what is the impact likely to be?
So happy morning to everyone. Our results have come out, and I must be very excited to inform everyone that while yes, the top line growth that we've seen has been about 7.5% in a consolidated manner, and the retail growth that we have seen is about 9%. But the profits have grown by the PAT has grown by almost 85% for Q1 compared to the last year Q1. But again, at the same time, we must see that compared to Q3 of last year and Q4 of last year, the margins, the EBIT margins, the EBITDA margins that we have seen has been in the same line. Q1 has been a challenging quarter in terms of, with the heat wave, with the elections coming in. So therefore, maybe the top line could have been better in a different situation. But we had focused on ensuring that we look at the quality of margins, the hedging mechanism was in place, and therefore there was a normalization of profit. We had opened 4 new stores, a company-owned, company-operated 2 franchisees. So all of it put together, the quality of the growth was good with all the controls in place. And in terms of the current situation that we see post the cut in duty, I must tell you that, first of all, it's a great move by the government that the duty has been cut, because it did boost the consumer sentiments, and there has been a lot more excitement, especially with the wedding season that is coming in Q3 and Q4, that upper middle class consumers can now feel like buying gold. Initially, they were thinking that it was not in their reach, but now we can see higher footfalls at the stores. So at one end, yes, there will be an impact on the inventory valuation, which we feel that to the range of 50 to 60 crores that can get distributed over the coming 2 to 3 quarters, because it will not take a hit on the single quarter. But at the same time, the expectation of higher growth compared to what we have been seeing in Q1, and our focus on increasing all kinds of products, including diamond jewelry, which would give a little higher margins to the company. So the effort is all there to ensure that whatever hit we will be taking can be compensated by other efforts and initiatives.
Okay, Suvankar, hi, good morning. So 50 to 60 crore over the next 2 to 3 quarters, right? Spread out.
Yes, yes.
Is the impact. You did touch upon diamonds. I mean, we just spoke with you in July, so we have some of the numbers, and we'll sort of reconfirm whether you're on track for all of that. You should be. But on diamonds, there were some reports which were coming through in the recent past, talking about how sales are suffering, some sort of manufacturing and polishing units shutting down. Is that seasonal in nature, or is something happening at the ground level where demand is kind of tapering off? We are entering a busy period with all the festive season all the way into the end of the year. So you have that tailwind, but underlying, as far as diamond demand is concerned, what's going on?
So what's happened is, like, for example, in Q1, we have seen that the diamond sales volume have come down by about 3 to 4%. That is for the for us and the Indian domestic industry. But more importantly, we must remember that diamond is an integral part of the exports revenue for the country, for the industry. And looking at the global scenario, when you look at the US, when you look at China, when you look at Europe, with all the wars and all the global uncertainties, the global demand has come down. We are already looking at US recession in place and unemployment happening. So these are the reasons that is leading to the fact that the slowdown happening in the industry, and the demand has been down. Plus, for India, what we have seen is that whenever there has been a big jump in the gold prices, immediately that has its own linked impact on the diamond jewelry purchase also, because consumers' budgets are limited. So while we can always try to convert it from gold to diamond, but then gold is an component of the jewelry. And if with prices going up, consumers think that, okay, let us wait. There is no hurry. We can wait and buy it later. So that's the overall, putting everything together. Plus, we have seen that, yes, because of the slow demand, the diamond prices have also been under pressure, especially the bigger size diamonds, above 50 cents and 1 carat. And that is leading to certain pressure on the industry, and prices are coming down. Demand is not as much as the supply is. So that's the reason they have decided to withhold and shut down factories for the time being.
Suvankar, just want to sort of get your sense, because there's so many moving parts, right? The price itself has gone up, gold price, but then you have the duty cut that's come through as well. Now, as we get into the peak festive season, like for like, and I know it varies a couple of weeks here and there, but I mean, if you go like for like, what is the projection that you're working with? Because even last year, I remember it was quite a bumper season. Now, as we get into festive/wedding, looking at the inherent consumer demand, would you expect flattish growth? Build up 5-10%, just give us something to work with.
Right. So see, it's actually, as you said, there are so many parts to this movement. So say, for example, last quarter, we had a growth of 7.5% in a consolidated way and around 9 to 10% in a retail way. Our aim and objective is to have a 18 to 20% growth. Now, with the first quarter that we have finished off with, I must inform and let you all know that because of the duty cut, we have seen a huge increase in footfalls. And that growth that was kind of slow in terms of top line in the first quarter is being compensated by the sudden increase in growth in the quarter 2, and quarter 3 is anyway a festive season. So we also just had our, the India International Jewelry Show that happens annually every time, where consumers and retailers, not consumers, retailers and manufacturers are all coming together for preparation for the coming season. And there has been a very good demand. So I think that this Q2 and Q3 will be very good. And with our expectations and the objective with which we are working on a growth of 18 to 20% for the year, I think we will all work towards that and try to achieve that target.
That's the top line growth number, right? FY25 top line growth 18 to 20%.
Yes.
All right, so Suvankar, let's get a couple of quick numbers out of the way. Studded ratio, what is the recent quarter numbers for last year?
So Q1 because of the slowdown and the fall of diamond volumes, the studded ratio has come down to about 9.5 to 10%. So
and where is that number headed?
And that number, our aim is to take it towards 12.5, 13% for this financial year. So that's how we are working on Q2 and Q3.
All right. Thanks a lot, Suvankar, for joining in. The stock's glittering as we speak, and going by that guidance, 18 to 20% growth. Your shareholders will be quite happy as well. Appreciate you joining in.